let's get straight to today's market action. So joining us now is Unlimited CEO and CIO Bob Elliott and Kobeissi letter editor-in-chief Adam Kobeissi. Great to have you both here on what is a green day for the major averages and a green week for the major averages. Second week in a row that the S&P is seeing gains, and it's May 2nd, Bob. It's been exactly 1 month since Liberation Day, and the S&P has now joined the NASDAQ in regaining all of its losses since then. You used the word before we started the show here, fever dream. How do you see the market here? Does this rally have legs?
Well, I think the question is basically the markets have priced out any impact from Liberation Day, given the moves that we've seen. If anything, actually, we're back at where we were post-election in terms of, say, stocks versus bonds in the pricing. And at the same time, I hate to be the bearer of bad news, but the effective tariff rate is still 25%, up nearly 20 points from where it was before Liberation Day, and there are no deals. And when you look at that combination of things, you say if you believe that there's any risk that the tariffs are not going to get fully rolled back, you've got to think that stocks look expensive here.
Adam, how do you see this market here? Because stocks do look kind of pricey. We're back above, 20 PE for S&P here. We have had, I guess I'd call it constructive trade talk this week, but as Bob just mentioned, no actual deals struck. But we did have strong tech. Earnings haven't been so terrible. What moves us next?
Look, I echo a lot of that sentiment. We actually put out a short note today on equities in our work, and I think really this market is entirely a product of sentiment. You had some of the most bearish sentiment in recent history going into mid-April. Now you have a 9-day winning streak, I think for the first time since 2004, when in reality, we have improved slightly. I think we are starting to hear the right things regarding trade deals, regarding just optimism in general. But I also think that the bull trade is starting to become crowded again. And I think a V-shaped recovery to all-time highs just does not make sense. And beyond tariffs have been kind of scapegoated for almost everything that was bearish recently. I think there are some more cracks under the surface. I think the labor market data, if you dig into it, is not as strong as it looks. ADP data, if you look at, indications that inflation could start coming up a little bit because of tariffs going forward. And then next week, you had the Fed meeting where obviously President Trump has been calling for rate cuts for some time now. I think today's headline number on the jobs front is basically solidified no rate cut next week. I think the Fed's not in a hurry to cut rates because that's literally what they've told us. So I think right now we're overheated. I don't know if that means we go back to the low, but I think it means that we are overdue for a pullback here.
Bob, to that point, we still have a disconnect between the hard data like today's jobs report and the soft like consumer sentiment. Investors look better in this market than they feel. You seem to think that the hard data is going to catch down to the soft data versus the other way around. In a way, the past month, for the bulls out there, for those who agree with the president's policies, would argue against you, wouldn't it?
Well, I think the hard data, the challenge with it is it's very backward looking. And so you've got to start looking at in an environment where we have a radical policy shift. We have an embargo when it comes to trade from China. The ports are effectively empty at this point on the West Coast. Truckers are seeing the lowest runs that they've seen since COVID. Those are all things that are leading indicators of what's likely to transpire in this economy. So we can all look at the jobs report and talk about how jobs were, in April and in March, and that's not going to help us really understand what's likely to happen ahead. If you're going to look at, if you have any optimism in this market, you really don't want to be looking at the U.S. stock market, certainly at these levels. When we look at what professional managers are doing, hedge fund managers, they're looking outside the U.S. And one of the more interesting things that's happened over the course of this rebound is actually foreign stocks have outperformed U.S. stocks during this environment, recognizing that broader shift that probably that was sparked on Liberation Day, which is the movement of capital away from the U.S. and towards other economies, that continues pretty much unabated, even when you have about as good a news out of the U.S. as you can possibly imagine.